This week, the main thing is the Fed interest rates, and we are expecting that there are going to be more rate cuts happening. And so, really quickly, before we hop onto the rate cut articles, let's just take a look at what's happened so far this week. So we had quite an easy start on Sunday, a lot of news from China, and then we had PMI data coming out from the Euro, GBP PMI data as well. The services side seems to be expanding overall, even for the US. And then when you're looking at the manufacturing side, we're starting to see a little bit of contraction happening there. So anything that happens on the manufacturing side, it's going to trickle over to the services side as well. And then let's go ahead and continue down. We had employment data coming out from the UK here, and claimant count change. This is change in the number of people claiming unemployment related benefits during the previous month. We were expecting a hike up from the negatives up to 28.2, only ended up getting 0.3, brought in some more optimism. And then today, we had CPI data coming out from Canada, and then we had retail sales data coming out from the US. The core retail sales, so this is excluding automobiles, we saw that it maintained at pretty much the same rate as previous. And the reason why I say same rate, not the same numbers, because this is still an increase, but it's just at a 0.2% instead of the 0.4 that we're expecting. So we're expecting that retail sales were going to hike up last month, but going into next month in January, there's a very high chance that we're going to see a higher number that because of all the Christmas and holiday shopping that's essentially going on. This is including automobiles and just total value of sales at the retail level overall. This hiked up from that 0.6% that we're expecting up to that 0.7%. And then continuing down, a lot of low impact data coming out. And then in pre-London session today, we have CPI, PPI, and RPI data coming out from the UK. So inflation all across the board, the consumer, the producer, and the retail side. So producer input, trickles over to the producer output. If on the input side, the producers are facing more inflation, if they're seeing that it's more costly to produce certain products, certain goods or services, then you're going to see that being trickled onto the output side, because then of course they're going to try to make up that cost for onto the retail side as well, that they're going to push onto the retail side. If the retail side is starting to see higher inflation coming from them purchasing those goods and services, then they're going to hike up those prices and pass it over to the consumer. So that's the whole trickling effect that we're going to see across the economy. So that's the same thing when you're looking at the PMI data, where if you see hiked numbers on the manufacturing side, if you see that we're starting to sit in expansionary mode, which is above 50, then you're going to see that being trickled onto the services side as well. Then tomorrow is basically the big day when you're looking at the USD. So there's interest rates coming out. We're expecting another 25 basis point cut. And we also have the FOMC statement. The most important thing is more of the economic projections and then the press conference. This is where Powell is going to be asked questions about what's the future outlook, even with the new president coming in, what is he expecting, all those kind of things. And then in Asian session, you also have interest rates coming out from Bank of Japan, where we're expecting that they're going to maintain the same rates, but there's also a slight possibility of, can we see another potential rate hike? There have been some indications of that if you have been following the yen news. So that brings us onto the Fed set to deliver third straight interest rate cut article. So same thing here, the main projection here that we have been seeing from beginning of the week until now is all pretty much market sentiment moves when you're looking at the technical analysis. So that is more of the investor sentiment. The sentiment here is that we are going to potentially see another rate cut for another 25 basis point cut. And then from there, going into next year, what are some things that we can potentially see? So we're expecting, a few more rate cuts, and then finally kind of just holding it out around that 3.75, 3.5 mark. And so that's kind of the projection that we have for the next year, more potential rate cuts. But as you can see, we have been quite steep over this past few months, just the second half of this 2024. And then things start to slow down here a little bit more. Bond traders target deeper 2025 Fed rate cuts than market expectations. Bond traders have been boosting options and futures wagers that the Federal Reserve is about to signal deeper interest rate cuts next year than the market anticipates. So this is what we're anticipating right now. And essentially what that article says is that we're expecting even more rate cuts or even higher rate cuts. Instead of just taking it from 25 basis point each, it can potentially even be 50 basis points or so. So that's essentially what is the meaning here, and then we're going to come back down. Right here, for example, where we're sitting at that 3.75, we're projecting Fed rates down to 3.375, so even lower than that 3.5 that we have been seeing on the article, on the previous article. So that's pretty much it on the fundamental side, because this week's main focus is more of the interest rates that are coming out from the US, Bank of Japan, and then that kind of starts the cycle for even the GBP side. So from the UK, same thing, we're expecting that we're going to maintain those interest rates. And the sentiment so far, when you're looking at, just 1 second, Marby, but the sentiment on the Bank of England side has been more of, we need more data to come in to support the fact that we can look into another rate cut. If not, we're just holding on to the same exact interest rates until we have further data that supports the fact that inflation is starting to calm down on the UK side, and we are sitting in that economic growth cycle, quote unquote, where we can start to, kind of manipulate the interest rates. Go ahead, Marby.
So on the interest rate, so when I think of that, I think of two things, like how much money I'll make when I leave my money in a savings account. And then the
Uh-huh.
other one is how expensive it is when I borrow money, let's say from my credit card. Which one
Correct.
is this talking about in that context?
So in this context, it gives you a range of essentially how much money are you making. It's both the same thing. So how much money are you making when you put your money into your savings account? But also the federal funds rate is essentially how much money or how much interest are they charging for like these overnight repos, or even when you're taking out a loan, those kind of things. On the retail side, these things do take up a little bit to kind of fully blossom out onto the actual true picture. But mostly what you're going to see like immediate effects of this is going to be more like on the overnight repos. So those are like the few things that we covered in the fundamental webinars, right? So that's exactly what this is referring to. So when you go back to the webinar, there's one specific one where we're talking about the interest rates, and I show you all the different charts, and then we kind of walk through like, what does each chart mean? What does each like interest rate data mean? And how does it correlate with like all the other rates that we see?
Okay, thank you.
Yeah, for sure. And then we have some GDP data coming out from the US on Thursday, plus the unemployment claims, another crucial point that we're going to be watching out for. And then finally on Friday, we have the core PCE price index. So that we're seeing a lot more volatility actually with interest rates approaching on Wednesday this time around, because PCE is coming out after interest rates have been released essentially. So core PCE price index is another gauge that the Federal Reserve watches, because that's kind of the primary inflation measure, and that's coming out after the interest rates are being delivered. So that's why all the inflation data that we're getting up until this week were very important, like CPI, PPI, all that type of stuff for the US, and we're seeing a lot more volatility in the market for that reason. That's on the fundamental side. Any questions here before we move on? Perfect. So let's go ahead and move on to the technical side. So we're looking at US30, massive sell-off that has started happening here. So what we're going to do is mark off that top wick resistance right there, which is going to be, let's just call it our 45,000 mark flat. And we will adjust this when we drop down to lower time frames to narrow in our zones. Next level that I'm going to mark off is going to be this top wick rejection right here that price is approaching. We have a little bit of a bottom wick rejection here as well with the current monthly candle, but we have a lot more volatility around this level because of that massive top wick rejection, and we will see that when we drop down to lower time frames. So the reason why I marked this off, not the support immediately, is because of that massive top wick rejection here on the monthly candle. So we know that price is already approaching this level here with the current monthly, and then we're rejecting that area, so we want to be a little bit careful. You can mark that off with a line or even a zone. I would mark it off with a line, just so when we drop down to lower time frames, we know that this is a very important level. That's going to be that 43,400. And then if price continues pushing down, then we come back down and target this. But so far, we have been maintaining very bullish momentum to the upside. And then let's go ahead and drop down to the weekly time frame. The structure here remains bullish. So nothing has really changed here until price can break below 43,400. That way we come back down, and simply we are testing structure at this point around that 42,000 mark. Test of that structure, and then there's a very high chance that we just push right back up, or even from this point and then push back up. Or if we come back down deeper, then that's the break of structure below that 42,000 mark. you test that and then you continue down and you come back and target some of these previous areas around 40,000 or 39,000 areas. That's another conversation when price continues breaking past these levels. But as of right now, all we're doing is just kind of following that structure. We had a massive bullish momentum to the upside after this corrective move, a little bit of a break and retest, but massive push. And now we're simply correcting that. And we see that every time there's a bullish push, price comes back and corrects. Same thing, push, corrects, push, corrects. And we're just maintaining that bullish structure like that. Let's go ahead and drop down to the daily. So look at all that seller's pressure to the downside. And then at each of these points when price is approaching some of these key areas based off of, let's say, the daily, like even here, you start to see that some of the volume does start to die down a little bit. You look at the candle body closures here, and then same thing here as well. So these are the three most important levels, or the most prominent levels. Where price consolidated, that's that massive volume that follows after consolidation, right? We see the same exact thing happening on a 15-minute, 30-minute, 1 hour, 4 hour. And it's the same exact concept when you come onto these higher time frames. Even on the daily, we were consolidating for so long. And then when we finally broke below it, there was that massive seller's pressure to the downside. Also notice for all these days, we have not pushed back up bullish. We haven't had a single bullish close. That tells you that as price is approaching this key level that we marked off from the monthly time frame, that there's a very high chance that price is going to retrace back up and give you some corrective moves. That's what we tend to see as we're approaching, interest rate release as well, where price has a massive sell-off or a massive push up, depending on the sentiment leading up to that news release. And then the day of, you start to see, very little volume, like very little candle body closures there, or even price pushing right back up to give you some corrective moves, and then it continues in whichever direction that it wants to go into. But as of right now, all these monthly, weekly, daily levels have been confirming that we're tapping into a very strong level, and we're rejecting off of that. So the previous daily candle gave you a nice bottom wick, and then the new daily candle, a little bit of a bottom wick, kind of just hanging around this area. So you don't have strong sell opportunities unless price can clear below this 43,400. Then you target this wick fill here, and then a continuation down to come back into these areas here. If price just holds on to a support here, then you look for buy opportunities as price breaks the previous daily high and then continues to the upside. You come out to the 4 hour, so this is where you start to see that little bit of support being formed. So we had that massive consolidation here once again, even based off of the daily, even the 4 hour, that massive consolidation. And then from there, the seller's pressure has been so strong that we try to push down, and then we end up kind of just consolidating out here for a little bit, push down again. Every time we're breaking a new low, either we're collecting orders or we're seeing retracement, right? And that's essentially what's going on here, where you had a massive sell-off here, that huge leg of sell-offs, and the price is now finally starting to push back up. Even based off of the 4 hour time frame, you have this little consolidation area that this candle is trying to break above. So let's say if this candle does continue push up bullish, then you have those buy opportunities to come back up into that 43,700 mark at the very least, to come back and correct this massive seller's pressure in this entire leg, if not a little bit higher, just to continue pushing back down, because that is an intraday structure that we are seeing right now. So higher time frame structure is bullish. Now what we're starting to see is this intraday structure of coming back down, simply to give you that corrective move, to correct that massive bullish pressure, and then kind of figure out the direction based on the fundamentals. Any confusion here? Perfect. So based off of the 4 hour, even here, we're trying to break out of that consolidation. 1 hour, this is where you're going to start looking for your entry. So again, you wait for price to clear below this, and then you look for your buy opportunities to the upside. And then if you're looking for sells, once again, they're only valid when you're looking for sells below that 43,400. Let's come on to the monthly. We have price, top wick rejection. I'll just call it 196,100. And then instead of making a line, what I'm going to do is create a zone here, which is that previous monthly resistance, right into this area here. And then if price pushes back down, then we target sells coming back down here. But as of right now, we're kind of just hanging around here. So I'm just going to mark off these two levels for now. Come on to the weekly, we had price coming back down and kind of just tapping into this area. You had some nice sellers pressure, tapping into previous consolidation areas. You get that liquidity grab, push back up, a nice lower high that's being formed here. A little bit of a retracement. We do the same thing, end up creating a higher low right around here. And we're kind of just testing, right, the higher time frame levels, the monthly levels here. So what I want to see is based off of the daily and weekly, if we're going to keep rejecting this, are we going to flip back down to continue pushing? And then the first target is going to be that 190,500 mark where any sells. And then you target even this lower level after price clears below that. If not, and price continues pushing back up bullish, then I want to see a break and retest above this 196,100 for any swing trade opportunities to the upside. If that happens, you have a range of almost 300 pips. So like around, let's say start off with this wick fill right here. So around 154, and then you come to the top of the range for almost 350 pips. If price reverses back down and continues pushing down based off of the fundamentals like interest rates and all that stuff that's going to be coming out from even the UK, then you have another 300 pip range right here that you can trade. But either way, we're going to be a little bit more patient here. And then you come onto the daily time frame. You see a little bit of resistance being formed here after price created that lower high. A little bit of resistance, new daily candle just started forming about 4 hours ago. So what we want to see is for any buys, price breaking this high right here and then pushing back up, or you wait for price to break the previous daily low and even its own low and continue pushing down. If you're looking for swing trade opportunities, you're waiting for the zone to be cleared out. If you're looking for quick scalp opportunities, what you're waiting for is price to break its own low. So this own daily low right there at, let's say, 195. Price breaks 195, you have that seller's pressure to come back down and fill the previous daily's bottom wick. So start off with 30 pips, come back down into the range for about 66 pips. And then if it continues pushing down, then you have an opportunity to turn that scalp into a swing trade and even lower. So that's what you're going to wait for. If you're looking for scalp buy opportunities, then you wait for price to break its own high. That's how you test the volume, everything that we have been practicing in the simulation sessions and everything like that. You're going to apply the same thing here. That 195.5, price breaks that top wick and pushes back up. You're coming to fill the wicks and even a little bit higher here. That's your range when you're looking for scalp opportunities. Your entry is after a confirmation of whatever happens on the 4 hour. So 4 hour breaks the low. Then you look for those sells to the downside. If breaks that high, you look for buys to the upside. That way you're clearing out of this consolidation even on the 4 hour time frame. And then your entry happens on the 1 hour right here. So you have that little bit of seller's pressure, price holds onto a support, we're trying to push back up, you still have this entire consolidation. You clear that, you have some good scalp opportunities in one direction or another. And then let's hop over to gold. If you guys have any other pairs that you want me to review, just let me know and we can do that. So for gold, we're going to mark it off at the top wick rejection, so not at that resistance here, because before we reach here, we need to break our own top wick rejection. Right now, we're sitting at this indecision, essentially, where price is sitting as like a doji on even the monthly candle, right? So it's kind of trying to figure out its direction, and hopefully gold or interest rates tomorrow is going to be a good catalyst for gold to move in one direction or another. That's our range based off of the monthly. Come on to the weekly. So here you can adjust your level again. So what I would do is adjust it right below this bottom wick rejection right here on the weekly. And if price continues pushing back up, I want to see, potential scalp opportunities to come back and revisit our own weekly high. And then if price continues pushing past that, then you have a good swing trade opportunity to the upside. And if not, and price kind of just ranges here, then you have a scalp opportunity within this range as long as you understand what the limitation of your trade is. You come onto the daily, and then you have, again, price respecting this entire bullish structure to the upside. But then here we tap into these previous highs, and then price rejects that, and then you see that seller's pressure, that consolidation, another push back up. It seems like slowly we're starting to break our own highs. So here as well, break our own highs, we come back into this area of consolidation. So this is why I say that it's very important to understand what's the limitation of your trade. Because if this candle flips, if this daily candle flips, there's a very high chance that we only come back down into this 2633.1 level, and then price rejects that and then pushes back up. Or if you're looking for a buy opportunity, same thing, price comes back into this zone and then continues pushing back down after that if we're not ready for a complete breakout in one direction or another. So that's how you take advantage using higher time frame analysis of whether you're looking for scalps or your swing trade opportunities. You come onto the 4-hour and you can look for your further confirmation. So I would stay clear of this entire area if I was looking for scalps. If price is pushing above this, then I look for those buys. For sell opportunity, same thing. You can look for sells as price reverses back down, but understand that there's a lot of wick rejections as price approaches this 2633.1 level. So understand that you might also get another wick rejection here. So being able to, mark your proper TPs and even take partials along the way is very, very important in a setup like this. All right, we have some requests. Let's go with your USD. Do you have any markups for this yet? Any levels that you have marked?
No, not yet, but no.
Do you have a bias yet for buys or sells, depending on the type of analysis that you have done for this?
I'll take a look and let you know later. So you can take dollar yen for now.
All right, so we'll go ahead and move on to USD JPY. Make sure that whenever you guys are like requesting pairs, I'm happy to break them down, but at least have like the fundamental side kind of down, the analysis, so then that way we have, a base point to go off of. But we'll go ahead and go to USD JP or Euro USD when you take a look at your fundamentals unit. All right, Johnny, what about you for USD JPY? What are your fundamentals here? What are your drivers here for this pair?
Yeah, so right now I'm bullish and biased on it, especially with previous fundamentals, even core retail sales and everything came out positive for USD JPY, and then it kind of matches up on the technical side of things. I know we talked about it before, but kind of right now, if you look at the monthly, there's a candle to the left. We've broken like a high support or support level. So I'm personally aiming for that wick fill to the left on the monthly to the left. And then obviously when we drop to higher time frames, you can even notice on the 1 hour and 4 hour that we're creating like higher highs and higher lows.
Perfect. That was spot on. Good job. So let's go ahead and drop down to the weekly. So that was perfect. Those two levels based off of the monthly. Coming on to the weekly, we know that these levels check out, top wick rejection, resistance areas, and then that little bit of support before price pushes back up. So here, based off of the weekly time frame, another thing that I'm going to point out is going to be price rejecting right into this area here specifically, right? So you get that bottom wick rejection here. This is where that weekly candle closed. The next one started forming here with the top wick rejection and pushes back down. When this candle tried to break above that area, that's the same exact level that we rejected almost 2 weeks in a row, but we ended up creating a support here and then finally pushing past that, right? And then right now, that's even though we're bullish here on the weekly candle so far, if price pushes past that, then we have that clear entry to the upside of where you said that, price is going to come back and fill that previous top wick. That's if we break out of this, right? So that is going to be another good level to watch out for as we're approaching, lower time frames and looking for potential scalps or even swing trade opportunities. Come on to the daily. So you can confirm this level here on the daily as well, where you have that support being formed here, and then finally that nice push after a consolidation of a few days. You have that bottom wick rejection, and then finally we break back up, coming back, kind of revisiting that area, but we don't revisit that zone here because we continue that bullish momentum to the upside, right? And then finally, when we do come back and revisit this area, there's consolidation here again for a few days, that top wick, and that's really when that entire seller's pressure starts, right? Because here we close out our own range, but we didn't have enough volume to come back and fill that daily bottom wick right here. That's what this candle did. It even broke past that. Then as we approach this area here once again, based off the daily candle, you have this little bit of gap up that happens. But for a few days, we end up closing like a doji right around this area. And then finally, right above this, you have this entire support that's being formed on the zone. That's the same area that price is holding onto a resistance with the previous daily candle breaking the lows. So for any buy opportunities, you have those clear entries to the upside if price breaks above the zone. So like around 154 area, you have that clean range to the upside. The reason why I'm not worried too much about this resistance here is because we've already kind of had this little bit of retracement, and we know that this is overall just a consolidation area, which has checked off as kind of liquidity grabs, right? The price just makes a bottom wick here, even on the daily, and then we finally have that volume to the upside, then I'm not really worried about this top wick rejections. I would only be targeting, these next areas as potential partials. So like 155.5 or even 156. But let's say we're only making a top wick here, then we know that there's going to be volume to the downside, and we can look for those short-term sell opportunities depending on what happens with interest rates tomorrow.
I just had one question too.
Yeah.
Because as you can see that the previous daily candles, they've been very bullish coming out of that consolidation range, just below. Would you call that basically, I think I can't recall if I asked you this before, would you call that like an extension and wanting to see kind of like a healthy retracement, like
Yes.
where price is? Is that what you
Yes.
would call it? Okay.
Yeah. So that's just price making a higher low here, right? So that consolidation is a massive push up, and then you're coming and tapping into like these weekly, monthly levels essentially. So what we
Mhm.
still want to see is like some sort of retracement because of that massive push up and the volume that we have been seeing. So either you're going to get consolidation here or you're going to get a retracement here, because those are two ways that the market collects orders.
Okay, thank you.
Yeah, for sure. You come onto the 4-hour time frame, you already have a little bit of support being formed. So once again, you wait for the candle closure above the zone, and then you look for your entry. So don't take an entry right when the candle breaks, but rather you want to see some candle closures here. Even on the 1-hour time frame here, for example, if you get a candle closure here, and then it's kind of like the beginning of that 4-hour candle, that's perfectly fine, because that means you still have 3 more hours to kind of test your volume. So if you get like an hourly candle close here and the next one pushes back up bullish, that's a good entry point that you can take. All good for USD JPY. Any other questions for this pair?
You were saying on the 1 hour, if it closed above, with a couple hour candles, that you would feel pretty good about potential buy opportunities, considering that that's an area that had range, the consolidation range.
Yeah, that coupled with, if this is, let's say, New York and London overlap, or even when like interest rates is about to come out, let's say like an hour before interest rates or something like that, because those
Right.
are high volume times.
Gotcha.
So you
Okay.
wouldn't take that entry if it was like Asian session or like a slower session, basically. But if
Right.
it's like a New York London overlap, New York just opened up, or is New York Stock Exchange open, or we're getting closer to interest rates release, some of those high volume times, then yeah, like just having a 1-hour close and then the next candle push up, and that's the entry that you take.
Perfect. Thank you.
Yeah, for sure. Any other pairs, you guys? All right. Let me know when you have the fundamentals unit. We can also talk on Discord for that, for your USD. But other than that, I will see you guys for the interest rate release tomorrow, and we will have a live trading session. I've kind of given you guys on the details on Discord anyways. But have a great rest of the week and rest of the day, you guys. Talk to you soon.
Thank you.
Thank you.
Yeah, for sure.